China, the United States, and Europe. Three economic giants competing for power, influence, and prosperity. But who's really winning the global economic game? While America thrives on innovation and capital markets, China advances through strategic planning and rapid industrialization. Europe, on the other hand, focuses on stability and sustainability. In this video, we'll look beyond the numbers to explore each region's strengths, weaknesses, and future prospects. And by the end, you'll know who's leading today and who might lead tomorrow. Let's start with the basic rules of this global competition. Economic power today isn't just about GDP. It's also about innovation, technological leadership, energy independence, education, demographics, and geopolitical influence. These factors determine which region can generate growth and secure prosperity in the future. We'll begin with the United States. For decades, America has been the world's economic powerhouse. With a GDP of over 25 trillion euros, it remains the largest economy on the planet. Its greatest advantage lies in its capacity for innovation. Silicon Valley is a global symbol of technological disruption, home to the world's biggest tech giants, Apple, Microsoft, Google, NVIDIA. The U.S. system encourages entrepreneurship, risk-taking, and access to capital. Startups can grow into global players within just a few years. Another key strength is America's deep capital market culture. Citizens don't just invest in property, they invest heavily in stocks, fueling growth, innovation, and wealth creation. However, there are also weaknesses. Growing social inequality, a national debt exceeding 120% of GDP, and increasing political polarization that hampers long-term policy reforms. Much of America's manufacturing base has also been outsourced abroad, a vulnerability made painfully clear during the pandemic. Still, the U.S. remains the world's economic heartbeat, driven by innovation, energy independence, and the global dominance of the U.S. dollar. Now let's turn to China. Over the past 4 decades, China has achieved one of the most remarkable economic transformations in history. Since Deng Xiaoping's reforms in the 1980s, the country has evolved from an agricultural society to the world's second-largest economy, with a GDP of around 18 trillion euros. China's model is a form of state-directed capitalism. The government sets strategic priorities in sectors like electric mobility, robotics, artificial intelligence, and infrastructure, and mobilizes vast resources to achieve them. While Western democracies often spend years debating policy, China can implement long-term plans with extraordinary speed and consistency. Projects like the Belt and Road Initiative show that Beijing's ambitions are not only economic but also geopolitical. Through massive investments in Asia, Africa, and Latin America, China is building a global network of economic influence. But there are cracks in the system. Growth is slowing, the population is aging, and the property sector is under serious strain. Overregulation and state control are stifling parts of the private sector, and China's heavy reliance on exports leaves it vulnerable to global demand shifts. Still, with its industrial might, technological ambitions, and centralized coordination, China remains America's most formidable challenger. And then there's Europe, often underestimated, yet still an economic powerhouse. With a GDP of around 16 trillion euros, the European Union is the world's third-largest economy. Its model is unique, less focused on disruption, more on stability, sustainability, and social balance. While the EU lacks a unified fiscal policy, its shared currency, the euro, provides a strong foundation. Europe's industrial base, especially in Germany, France, and Northern Europe, remains highly competitive. Europe's greatest strengths are its diversity and its quality of life. Education, infrastructure, and social systems are among the best in the world. In green technology and sustainability, Europe is a pioneer, investing billions in renewable energy, carbon reduction, and digitalization. It's an attempt to combine economic strength with environmental responsibility in the 21st century. However, Europe faces structural challenges: bureaucracy, slow decision-making, an aging population, and dependency on energy and technology imports. While the U.S. dominates in tech and China drives industrial policy, Europe often relies on external suppliers, whether for semiconductors, software, or energy. Yet, don't underestimate Europe. The continent holds immense savings, a robust industrial base, and a vast trade network. If it can streamline regulation, strengthen innovation, and coordinate policy more effectively, Europe could become the most stable economic force in the long run, even if it lacks short-term dynamism. Comparing all three, we can see distinct patterns. The U.S. leads in innovation and finance, China excels in industrial planning and speed, and Europe stands out for sustainability and social balance. Each region has its own economic DNA and its own way of playing the global game. So who will dominate in the coming decades? The most likely outcome is a multipolar world. The U.S. will remain strong in technology and finance. China will continue to rise, especially in energy, electric vehicles, and AI. And Europe could become the world's stabilizing force with its focus on green growth and regulation. The economic strength of the United States is increasingly built on shaky ground, with a national debt exceeding 130% of GDP and deficits continuing to grow. Confidence in the government's long-term fiscal stability is at risk. For now, Washington benefits from the dollar's status as the world's reserve currency, but that privilege could be challenged if debt and interest rates keep rising together. The country's aggressive tariff policies, while protecting domestic industries in the short term, strain global trade relationships and add inflationary pressure. If the U.S. continues to spend beyond its means while alienating key partners through protectionism, the global dominance of the dollar could gradually erode, reshaping the international financial system in unpredictable ways. Europe, too, faces immense challenges in this global race. The European Union still boasts a vast single market, a powerful industrial base, and high levels of education, but structural weaknesses are slowing its momentum. Bureaucracy, labor shortages, overregulation, and a sluggish innovation system are holding back growth. Energy costs remain high, and dependencies on both the U.S. for defense and China for critical raw materials create strategic vulnerabilities. Demographic decline adds further pressure, as an aging population strains welfare systems and reduces economic dynamism. For Europe to remain competitive, it must deepen integration, streamline regulation, and massively invest in research, digital infrastructure, and energy independence. China, meanwhile, likely represents the greatest challenge to both the U.S. and Europe. Over the past 2 decades, it has pursued a consistent strategy centered on technological independence, global influence, and financial control. Through initiatives like Made in China 2025 and massive investments in artificial intelligence, semiconductors, quantum computing, and renewable energy, China is rapidly building the foundations of future dominance. At the same time, it is strengthening its position in the global financial system through the digital yuan and the Belt and Road Initiative, which extends its economic reach across continents. If China successfully combines innovation with financial stability, it could indeed become the world's new #1 power, economically and geopolitically. There's no clear winner in this global economic game, at least not yet. The U.S. remains innovative, China ambitious, and Europe stable. Who comes out on top will depend on who best combines technology, demographics, and sustainability. If you want to understand how these powers continue to shape our future and what that means for investors, make sure to subscribe and watch the next videos on this channel.